Hey there, Trader Tim from eminimind.com doing a Monday market analysis video. It's the 7th of December, and this week we have a couple of IPOs coming on the market with Airbnb and DoorDash. There's a possibility of having the vaccine for the COVID vaccine approved this week, and then next week we have actually a Fed meeting announcement on Wednesday. So there's definitely some catalysts here over the next 2 weeks that could certainly influence the market. And I say that because we are approaching the negative 23% target on the SPY. And so it would be nice if we could make it all the way there before seeing um, a bigger sell-off. But what I want to caution you for, or to watch out for, is if we make it to the negative 23% target, and then all of a sudden, there's vaccine approval, or the Fed says something that the market really likes, we could end up just kind of having a blow off top where we just make it to the negative 23% target and then go shooting up from there. So while I am kind of watching for opportunities to put on a hedge up here, on the flip side of that, I'm also kind of preparing for what might happen if there's a blow off top. And so as far as intraday goes, if we flip over to the ES, today I was actually looking for us to make new highs. Off of the open, we had a really tight first 30-minute range, and we were inside of the prior day's range, but up near yesterday's or Friday's highs. So if we zoom in a little bit, I'm going to get rid of these couple drawings. You can see these two gray lines on the chart. That's the top of the first 30-minute range, the high, and then the bottom, first 30-minute range low. And, you know, a small range like this, about 6 points, makes it easier for us to break out. If the first 30 minutes has a giant range, well, then it's going to be easier for us to stay in that range because the market would have to move so much further to break out of that range. So when the market has a small range, typically we can that yields for more possibility of a breakout. So at the open today, I was looking for long setups, and we kind of ended up with a handful of conflicting signals, and so that made it a little bit difficult to uh, see any follow through. And what I mean by that is if we draw up the first low to high retracement, we traded nicely at the 50%. And the following little micro setup here, if I draw from its low to high, well, it saw a little bit of resistance at the opposing short. So if we continue on the way up here, and draw the next low to high, you can say, okay, well, we pulled back nicely to this 50% long. Well, at the same time, we made this little triple top up here, and we hadn't really moved above the first 30-minute range high by very much, only 2 ticks. So again, that was not a super strong case for the bulls. I chose, because we ended up with a high tick that did not line up with high price, I chose to try along here, which was um, a 50% that lines up with the top of the first 30-minute range. So it was this was the first one off the bigger halfway back, and so this would have been the second one in the trend, with the thought being, okay, we are only another 5 or so points to all-time highs. So if we can get in here and get some momentum behind us, then that would position me well for a breakout. So as you can see, we had a nice bounce originally, or off of the 50% initially, and so drawing up the next retracement, I use that as a place to trail my stop, and that essentially brought me to break even before we broke down. So scratch on that one. And that was really it for the long department. There wasn't really another sign to push us or another sign to enter because we were not able to push higher into new highs. So let me put that 30-minute high back on the chart. And so hovering around the top of this 30-minute range thereafter, things got super messy. I'm typically, if I'm not in a trade, I stop for the day, at least with the ES here, about that 90-minute mark. If I'm in a trade, I'll just carry on. But I typically don't like to trade in the late morning into the lunch hour, just because that's when you see a lot more chop, and you can end up just taking boredom trades or making silly mistakes. So looking at the 15-minute chart, a lot of barbed wire up here, meaning where you have tails, the candle wick has a topping tail and a bottoming tail. So a pretty balanced market. We also had a pretty balanced breadth and advanced decline line. When those are more bullish or more bearish, like the two extremes, that's when you see a little more follow through. When we're more at a balance, a 1-to-1, then you're not going to see, or the market's going to have a harder time getting follow through. Not that it can't happen, but you'll start to see the breadth strengthen as the market is rallying. And we didn't really have that today. So watch out for those inside days. And then if we can't break out, if you take a long setup and it does not go, you get stopped out or it comes down and breaks a swing low, you really need to wait for another break of highs. And over here, this was later in the morning, we did have a break of highs, but it was only one tick. It's nice to see a convincing punch through the top of the first 30-minute range as we initially had. We were at about a 94 and we traded up to a 96. And so, a 2-point punch through has a lot more backing behind it than if we just break highs by 2 ticks. Okay, you say, where's the follow through? If the pit traders and the counter trend traders were able to roll things back over that quickly, and we were only able to go into new highs by 2 ticks, well, there's not a lot of momentum on the bullish side, on the upside. So those are some of the smaller nuanced things that I watch for. But if you're only focusing in for 90 minutes or 2 hours in the morning, you can be really focused in and pick up on those things. If you're watching too many charts and for too long throughout the day, that kind of stuff can just sort of drift away, or maybe you just don't pick up on it and you're kind of distracted with all of these other markets. So if you can just be a little more focused and clarify on which markets you're going to trade and just focus on those, you'll do much better over the long run. And then you can obviously expand into other markets, but getting those fundamentals down, you really need to be focused. So any questions, feel free to leave them in the comments below. And if you like the video, give it a thumbs up. Thanks. Have a great week.